A JP Morgan analyst, Wesley Naro states, NIO is a company that specializes in developing and producing electric vehicles.
Hey there guys, what's happening and welcome back to our channel. Following an excellent 2020, NIO continues to experience high demand for its premium electric SUVs. However, as China's Tesla grows into Europe, a worldwide semiconductor scarcity and strong competition pose a challenge. Is NIO stock a good investment right now? NIO came back from the verge of bankruptcy last year by more than doubling sales of premium electric SUVs. However, in addition to Tesla, it confronts supply difficulties as well as increased competition from Chinese tech and auto companies. But we're sure NIO stock will reach $500, and here is why. Number 5. Fundamental analysis and NIO earnings. NIO trails on key earnings and other basic indicators. It's a young, fast-growing business that's still trying to make a profit. On a scale of A+ to worst E, NIO stock has an EPS rating of 50 out of 99 and an SMR rating of D. The profits per share or EPS rating compares a company's earnings growth to that of other firms. Sales growth, profit margins, and return to equity are all factors in the SMR rating. NIO's EV sales increased 95% year over year in May, but decreased almost 6% month over month owing to a global chip shortage. However, China's growing Tesla expects sales to go up in June, reiterating its projection of 21,000 to 22,000 electric vehicle deliveries in the current quarter. NIO reported a larger than expected first quarter loss in April 29th. NIO lost 48 cents per share despite a 529% increase in revenue to $1.22 billion. NIO's gross margins improved from quarter to quarter and it generated positive cash flow from operations. NIO sold 20,060 electric SUVs in the first quarter, increasing 423% year over year. Despite an unexpected widening of losses in the first quarter, losses are expected to reduce this year.
2014. NIO has sold and delivered more than 100,000 vehicles to date. They sell a full line of battery-powered supercars as well as luxury sedans.
Number 4. Technical analysis of the NIO stock. According to MarketSmith chart analysis, after a failed breakout and sell-off earlier this year, shares have recovered from a low of 30.71 on May 31st and are back above the 50-day moving average. NIO stock is still 31% below its 52-week high of 66.99 with no fresh purchase opportunity in sight. NIO stock's relative strength line is recovering after a recent drop. A stock that has a rising RS line is outperforming the S&P 500 index. It's the blue line in the diagram. However, a 95 RS rating indicates that NIO's success over the last year has been in the top 3% of all companies. It much exceeds the 80 or above that top growth stock investors would want to see. The accumulation distribution rating of B by NIO shows moderate buying by large investors over the last 13 weeks. NIO has a lot of institutional support. As of March, 815 funds own shares in the company. According to the IBD stock checkup tool, NIO has 8 quarters of growing fund ownership.
And NIO, you'll notice, was also up a little bit over 3%, close to 3%, trading past over $45.
Number 3. The electric vehicle competition in China is growing. NIO intends to sell electric automobiles in China's premium market. Li Auto and XPeng are 2 of their competitors. Furthermore, Geely, a Chinese automaker, and Baidu, a digital company, aim to collaborate on the development of electric vehicles. Foxconn, an Apple supplier, is also interested in the electric vehicle industry. Geely has officially introduced Zeekr, a new luxury electric vehicle brand. With the Han electric car, China's BYD has made a significant push into the premium market. BYD is one of the world's largest EV and battery manufacturers, with Warren Buffett's Berkshire Hathaway backing. Tesla, Ford, and Volkswagen have all unveiled alternatives to NIO's successful recent electric crossover, the EC6. Tesla's Model Y, Volkswagen ID.4, and Ford's Mustang Mach-E are among the EV competitors, all of which are produced in China for Chinese consumers. NIO is growing its manufacturing capacity in China and preparing for its first international sales in Europe this fall. The ES8, a premium electric SUV, will make its premiere in Norway, a Tesla stronghold. NIO announced on June 7th that it's developing a new luxury electric car brand named Gemini. This followed reports that NIO was considering entering the market for low-cost electric automobiles.
Largest automobile market in the world, and then it has all these government policies to support consumers to buy EVs.
Number 2, the future of NIO and EV stocks. NIO, Li Auto, and XPeng are all growing their businesses in China to compete with Tesla in their territory. In the second half of 2021, NIO plans to boost monthly EV manufacturing to 10,000 units. By the first quarter of 2022, it aims to sell 150,000 units each year. Due to a chip scarcity and high demand for its new longer-range batteries, it's now restricted to 7,500 units each month. According to the China Association of Automobile Manufacturers, EV sales in China are anticipated to increase by more than 30% to 1.8 million units in 2021. According to IHS Markit, global EV sales are anticipated to increase by 70% by 2021. In the current quarter, both NIO and Li Auto plan to more than quadruple EV deliveries. Despite NIO closing down operations at a plant for 5 days in March and April owing to a chip shortage, the company has continued to grow. Meanwhile, XPeng reports a nearly 400% increase in Q2 deliveries.
Take a look at the market in general. It has been a wonderful day out there for those following along with the EVs and the clean energy and some of those stocks.
Number 1, why will it reach $500? Fundamentally, NIO's financial situation is improving after debt and liquidity concerns rocked the stock. In China, NIO is reducing losses while generating massive top-line growth. NIO's worldwide expansion gives the company greater room to develop. It's also developing new battery technologies. However, the EV battles are heating up as conventional automakers and tech behemoths scale up or enter the fray. The chip supply shortage is a negative for automakers in the short term. Battery availability might be an even larger barrier for EV companies in the long run. NIO stock has recovered from its May lows and may be forming a base above the 50-day line. However, because it's still considerably below its January highs, it's likely to hit $500.
NIO's April sales slipped 2% month over month, hurt by bottlenecks arising from the chip shortage.
So do give us your thoughts regarding all of this in the comments down below. And if you enjoyed this video and wish to catch up on more content like this in the future, then don't forget to like this video, subscribe to our channel, and hit that bell icon. Until next time, take care and goodbye.